Russia playing hardball here. Will they be able to come to any sort of compromise?
Well, I think they're starting off the negotiation from a rather extreme point. They do have to roll over the OPEC plus cuts. Now, if they don't do anything, that will be disastrous. OPEC now is challenged. Traditionally, they meet to try to balance oil markets. Right now, they have two things that they need to do. They need to establish a floor. They need to stem this hemorrhaging in the oil price, and I'd say that floor is $50 on Brent crude oil.
Okay.
The second thing is they need to cap the build of inventories worldwide on oil stocks.
Okay, so let's talk about that floor then. What do they need to do in the way of cuts, and for how long, to establish $50 as a floor for Brent, even if Russia doesn't play ball here?
Well, you've got to look at multiple scenarios now with a virus. Is it going to be containable, or is it going to be extending, and will it get severe? So I would characterize what OPEC is doing now as a short-term preventive action. To maintain prices at a floor of 50, I think they need to do at least 1 million barrels a day, and probably even more.
Do you think if they do more, they could do this type of thing where they say, we'll have a review a few months out to see what happens with COVID-19 and the demand side?
They can say that, but I mean, right now, the official line from the Saudis, from Abdulaziz bin Salman, the minister, is they need 1.5. Russia apparently left the meeting yesterday, and that was viewed very bearishly in the markets. But
John, the higher cost producers, some of which you just named off there in the list, we especially think of in North America, even parts of Brazil, right, operating at a higher cost here. So won't we see the supply response if prices don't stabilize at this level?
I think you're seeing pressure on some of the U.S. independents. It's not only the higher break-even cost, but for the last few years, you've seen their shareholders kind of revolt, saying, we don't want to see increases in reserves and production. We want to see share buybacks, dividends. We want income as shareholders. So, we've seen some of these U.S. producers feel the pinch, and again, oil field services are going to feel the pinch too. So this could be kind of have a knock-on effect.
It makes me wonder, given what you're talking about, too, and expectations with Russia holding the line and not coming to what Saudi wants them to do. I mean, not only will you see markets move if there's a disappointment on what they agreed to in cuts, but how much has been priced in a potential breakdown of that relationship?
Well, any perception that there's a fracture in this duopoly, you can just talk about an OPEC plus meeting, but realistically, the real politique is that it is the Saudis and Russia, and if they are at odds, then this can only send bearish signals to the market and further price erosion.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.